Howdy folks, want to talk about all these changes with FHA, conventional loans. Guess what's happened? FHA in almost all home buying scenarios is now a better financial choice than conventional. This is crazy. This is something that we've almost never seen before. If you're a housing professional, you may not even be able to think of a time where a government loan has always been the clear winner over conventional lending, outside of your VA and USDA examples. What's happened is that in the same 2 weeks that Fannie Mae and Freddie Mac tightened up, they started increasing fees, increasing substantially some of these loan level price adjustments that they're putting on many of these brackets of home buyers, even introducing superprime candidates for 760, 780 and penalizing anyone under a 780 credit score. At the same time that happened, the government stepped in, reduced Federal Housing Administration's mortgage insurance by an effective little bit over 1/4 point in interest rate. I say effective because the FHA collects right now 0.85% of the total loan amount, roughly equivalent to 0.85 in rate, and they've knocked that down by 0.3, so a little over a 1/4 point. Okay? Government loans, because they're not implicitly guaranteed by the government, they're fully guaranteed or explicitly guaranteed by the government in case of default, have always carried a lower rate of interest than conventional loans. Recently, this gap was about 3/8 to a 1/2 point. But when these LLPAs, these penalties to any credit below 780, any debt to income above 41, when these were instituted, these widened that gap for most borrowers to about a 1/2 to 5/8 of a point. And then in any scenario where you've got mortgage insurance, at least at the 10% level, at the 10% down payment level, now mortgage insurance is very comparable from conventional lending to FHA lending. When you get down to like 15% down, a lot of times that was a sum done conventional. That's not the case anymore. I've run these numbers. On a $300,000 loan, someone taking out an FHA loan versus conventional, 10% down, 720 credit score, 41, 42% debt to income. That person's saving at the same scenario about 80 bucks a month going to FHA. And then even after that mortgage insurance expires, they're still saving money with the FHA versus conventional. It makes it a no-brainer. There's 2 big drawbacks to FHA loans. One actually I think is smaller than the other. The first one's the appraisal. Realtors, you know what I'm talking about as far as an FHA appraisal. An FHA appraisal is going to make sure that the property is safe, secure, and sound. Those 3 S's are actually part of their mandate. Now, in that means that they're going to be looking to see if there's anything like broken glass on the property, anything of that nature, because the FHA cares about the property's ability to be habited on day one. A conventional loan, by the other token, is only concerned about the market value of the property. Can Fannie Mae and Freddie Mac, if the property defaults, can they get their money back out of it? That's their only concern. FHA cares about your safety. And to me, for home buyers, that's actually not that big of a drawback. To me, it's almost like a check on the home inspection, because an FHA appraisal is going to perform some of the same foundational functions as a home inspection. I don't find that many home buyers who are looking for something for their primary residence really in the market that much for something that is not safe, secure, and sound. So I don't really see it as a drawback. In fact, I think it prevents a lot of folks from making a mistake. The other drawback is a real one. So the FHA is going to apply nearly 2%, 1.75% of the total final loan balance on top of that loan as their compensation for guaranteeing the loan, upfront mortgage insurance premium. It is a drawback. However, there's even a benefit to it. Anyone who refinances an FHA loan, if they're just wanting to drop their rate, has access to the FHA Streamline. And as long as you do it within the first 3 years, you can do it between 6 months and 3 years, you're going to get credit for that fee that you paid. Okay? If you do it early in the process, it's more credit. Later in the process, a little credit. And those FHA streamlines beat the absolute snot out of a conventional refinance because there's not that much to it. There is no underwriting process. There's no income underwriting. There's no appraisal. There's not even, at many servicers, there's not even a credit qualification. The only thing that's a hard requirement by the FHA is that you make your last 6 payments on time, and if you've had the home more than 6 months, that the previous 6 months didn't have more than 1 late payment. Pretty easy bar to meet. If you're making more late payments than that, you need to be reconsidering your status as a homeowner. So conventional loans, on the other hand, when you go to drop down your rate, if your home's dropped in value, you might be stuck. You might pay an appraisal fee, be completely burnt, just threw that money in the garbage if your home's market value dropped. FHA doesn't care. They actually put this forth and encourage folks to use a streamline because anytime that someone's dropping the payments they're making on their home, from their eyes, improves them as a borrower. I'm actually really excited about this because now the government is actually acting as a check on the other side of lending. They're acting as a check on these agencies who, quite frankly, have gotten greedy after passing 2 waves of LLPAs, after making stuff harder for qualification, tightening requirements. Now, in order to stay financially solvent, I'm expecting we're going to see some changes coming out of Fannie and Freddie on these LLPAs because right now, it doesn't make sense most of the time to do a conventional loan.